Welcome to 5 Minute Finance, where we help you understand complex financial concepts and news in just 5 minutes or less. I'm Larry Mingerank, certified financial planner, accredited investment fiduciary, and founder of Park Lake Advisors. In today's episode, we'll talk about how donating appreciated stock to charity can be a more tax-efficient strategy than selling them first. Let's dive right in. First, donating appreciated securities to a tax-qualified charity can allow you to manage your taxes and benefit the charity at the same time. If you've held the stock for more than a year, you may be able to deduct the fair market value of the stock from your taxes in the year that you donated. Additionally, if the charity is tax exempt, it may not face capital gains tax on the stock if it sells it in the future. Now, you may be wondering why you should donate appreciated stocks instead of just selling them and donating the cash proceeds to charity. Well, if you sell the shares, you may face capital gains tax on any gain you realize, which effectively trims the benefit of the cash donation. Donating appreciated stocks can help you avoid this scenario and still benefit from the tax deduction. But what about cash donations? While they're still a viable option, cash gifts are generally deductible up to 50% of adjusted gross income. So, if you give a gift of $5,000 to a 501c3 nonprofit organization and you're in the top 37% federal tax bracket, your net gift may be $3,150 with $1,850 realized in tax savings. And don't forget to consider state taxes in addition to federal ones. It's also important to note that if you donate shares of depreciated stock from a taxable account, you can only deduct their current value, not the value they had when you originally bought them. So be sure to keep this in mind when considering your donation options. As with any financial decision, it's important to remember that tax rules for charitable deductions. Be sure to review IRS Publication 526, Charitable Contributions, and double-check that the charity has nonprofit status under federal tax law. And if your contribution totals $250 or more, your donation must be recorded. Finally, it's worth noting that tax rules are constantly being adjusted. There's always a possibility that the current rules may change. As such, it's important to consult your tax and legal professionals before starting a new gifting strategy. That's it for today's episode of 5 Minute Finance. I hope it was informative as well as helpful for you. If you have any questions or comments, please feel free to email us at info@parklakeadvisors.com or reach us by phone 517-887-9905. If you're listening to our podcast or watching us on YouTube, don't forget to hit the subscribe button. Be sure to follow Park Lake Advisors on social media platforms such as Facebook, LinkedIn, and Twitter for more quick financial bites. Thanks for joining, and until next time, happy learning.